This is Don DeBartolo, a senior commodity broker with Daniels Trading in Chicago. I am also the publisher of the Trade Spotlight advisory service. Trade Spotlight is broken into three segments: the Trade Spotlight Futures, Trade Spotlight Commodity Options, and Trade Spotlight Futures Spread segments. This is Beyond the Spotlight, a video that I produce that spotlights two or three different markets that may become trading opportunities for the week ahead. This week begins with Monday, April 15th, 2019. Before we get started, please pause the video and read the risk disclosures so that you understand the risks involved with futures and commodity options trading. Quick overview of what the Trade Spotlight advisory service emails look like. This is one that would come straight into your inbox. This is the options segment. It's got the timestamp so you know when the trade recommendation was sent out. It'll have a write-up on the trade and it's the strategy and the thinking behind the trade setup. You will have a chart to view the trade setup, the specific entry price, and the stop loss and target. This is an option trade, so it's letting you know the risk and reward for this particular trade. Okay, let's take a look at our first market. This is the June 2019 Swiss Franc, and what you see here is a inverted head and shoulders formation. So here's the head, here's the left shoulder, and here is the right shoulder. That's that low that was just put in last week Thursday. That low was 115 from April 19th. So that sets up our second shoulder. This is a reversal formation, so looking for the market to head to the upside. You can see I have an upper trend line drawn off, so I'd be looking for a close above this trend line to signal that long entry. Just above the market you see a 50-day and a 20-day moving average. The market could potentially get held up here, so a little more conservative approach would be a break and close above these moving averages. That can come as early as next week. A potential stop loss is this red line here below each of the shoulders. So I mentioned this low already. This low back here, that is from the 14th of February, 118. So those are potential stop losses. You can even use the head of the formation if you want to give the market a little more room. Obviously a break of that low would just be a complete reversal of this formation. That low is 99.70 from the 7th of March. A couple upside targets would be the 50% Fibonacci retracement of this sell-off. And you can also see there are some highs up in here that you can put a target order just in front of that level. Otherwise, you've got the 12-month contract high. That's up here from the 10th of January. That high is 104.42. So that's a potential upside target, secondary target on multiple contracts. Right now the MACD is a bit flat, and your stochastics is showing not much momentum, potentially oversold down here. So we'd like to see a hookup on both of these indicators before going long, and that could potentially happen on a break of this trend line. Moving along to my next chart, I have July 2019 cocoa, and I have a trend channel drawn off here that you can see there's not even a down day within this channel. So I'm actually looking for the market to break below this channel, which it did on Thursday, but then you saw the follow-up on Friday right back up. So what I'm looking for in this market then would be a break of this pivot point low that was not taken out Thursday or Friday. And that pivot point low price is from the 9th of April at 23.69. So a break of that low for a potential downside trade. You see the MACD indicator. This is a trend indicator. It's waning, potentially, turning over to becoming a downtrend market. You already had the stochastics. This is a momentum indicator in the overbought level and hooking down a little bit. Would like to see more momentum in this market, and that potentially could happen on a break of this pivot point low. Potential stop loss is just above Thursday session high. That high was 24.34. If you wanted more breathing room on your stop loss. You can go back to 12-month contract high. These highs up in this range here. This highest one that you see on the chart, that is December 26th, high of 2476. The yearly high, that's this high right here, is 2466 from the 7th of January. Downside target would just be a 50% Fibonacci of this rally down to this level here. That price is 2278. Sorry, it's cut off on the chart there, but 2278 is that 50% Fibonacci retracement. There's also some highs and lows in here that could act as a potential support level. So that would be the first target on this trade. And the final chart here, this is the July 2019, actually this is sugar, not cocoa. This is the sugar chart, and I have a pennant formation drawn off, and you can see that the market did close above it on Wednesday and then sold off back below, and now is back on the rise. So could have took a buy order or a buy entry on that breakout. Now this is just giving us another attempt. A break of that session high from the 10th of February is 1299. So a break of that 13 even level could potentially be another upside trigger. You can see there's a lot of action in this range here. You've got a 20-day, a 50-day, and a 200-day moving average. So stop losses below any of those moving averages would be fine, I think, to maintain a long position. Otherwise, if the market heads lower below this trend line, we no longer want to be long anyways. Upside target are these session highs right here. Those session highs, the highest one is the 1360 high. That's the 20th of February. Beyond that, you can go to the 12-month contract high up in here. That's October 24th. That high is 1426. You have, again, MACD is flat in this market as well because it's been choppy. It's been in this pennant formation despite this one breakout and subsequent pullback. You also see stochastics, the momentum is flat as well. So if it doesn't take out this session high, I'd like to see the market pull back to these moving averages and then turn around and head back higher, break out with the indicators following right along. So if you have any questions about those three charts that I just covered, or just the markets in general, feel free to give me a call, email, text. I've got my local cell and toll-free number and email address where you can reach me. We can tell you about these potential trade setups or the trades that we're currently in with the Trade Spotlight advisory service. If you're not following the service, you can do so on a free trial basis. Just go to danielstrading.com. Click on the Advisories tab at the top, and then select Trade Spotlight under the Technical Indicator Advisories. Technical Analysis Advisories. Click Trade Spotlight. You can read more about the three segments. You can click on links to see more about the three segments, and you can subscribe. Free 90-day trial. After 90 days, if you like it, it's $99 quarterly. Unless you're a client of mine or Daniel's Trading, then it's a free resource for you as long as you have an account here with our firm. So thanks for taking the time to listen, and happy trading.